Tamil Nadu is an economic powerhouse and the second largest contributor to India's GDP. Its robust industrial ecosystem has a right mix of over 40,000 large industries supported by over 9 lakh SMEs. Tamil Nadu also boasts of robust physical infrastructure with an excellent road network of over 62,000 kilometers and the only state with 4 international airports. It also boasts of the highest capacity of renewable energy in India with over 8,000 megawatts of power produced in the state. In an effort to build on the attractive growth prospects in Tamil Nadu and the government's commitment in maintaining the state's position as one of India's most preferred investment destinations, a global investors meet has been organized to realize the state's vision of inclusive growth through investment inflows, growth in employment, balanced regional development and environmentally sustainable long-term development. As a precursor to this mega effort, here is a showcase of some of the key developments in the state in various sectors.
New lease of life for Chennai's IT manufacturing setup with Lenovo India announcing the start of a new manufacturing facility in Sriperumbudur near Chennai. And with me to talk about this development is Amar Babu, Chairman of Lenovo India. Good to meet you, Amar.
Good to meet you.
Start off by telling me a little bit about what this is all about. It's obviously a new facility that will go into the manufacturing of Motorola and Lenovo smartphones, right?
Yeah, we are very proud of what we've been able to do here. So when the government announced the whole Make in India initiative and the changes in the recent tariff, we realized that it's a great opportunity. Okay. And it also happened that our businesses, both on the Lenovo and Motorola smartphones, started doing very well. So we took a strategic decision that India is going to be the next manufacturing center. So for Lenovo phones, this is the first center outside of China. And for Motorola, it's kind of a coming back home of sorts. Yeah. We're manufacturing it till a couple of years ago. Yeah. And after the acquisition, we are glad that we are able to start it.
The whole Make in India plan is a very future-ready plan, so to speak, right? It's all about going into the future and doing big things as far as manufacturing is concerned. So tell me how this fits into the larger picture as far as Lenovo's Make in India initiative is concerned.
The government's whole move, the Make in India vision, some of the changes in duties, the structures are all enabling this. I mean, people say there's more to be done, and I absolutely agree with them. But you know, do you look at the glass half full or half empty? I'm looking at it half full and say it's good enough to start. I think there's opportunity to do more, and I think we can do a lot more. But that's, of course, what we need to see in terms of execution. But overall, very, very positive. And, you know, we're almost manufacturing all our products in India right now.
All right. Amar, let's shift focus to Chennai for a bit, which is, of course, where you are. Sriperumbudur is really the manufacturing capital of Chennai, although it's located a little outside the city. Why Chennai?
We are very bullish about Chennai. And I was just reviewing the availability of talent and the local the leaders and the factory managers. They were very positive. They're saying they're getting good talent, trained talent, committed talent, productivity is on par with the best in the world. What more do you need? So we're very happy with this whole selection of Chennai. I have no issues.
It's interesting you talk about talent because, of course, Chennai is a traditional manufacturing hub. That's true in both component manufacturing, auto as well. But the fact that you talk about the availability of good talent is probably one of the nicer aspects you think about the city's setup, wouldn't you say?
Absolutely. And see, finally what we need, of course, the infrastructure piece, right? We need a good port. We need electricity. You need all those basic infrastructure. But then finally what makes a plant like this successful is also availability of talent. And you need both. And I think it's worked. You know, we can, again, as I said, you can always complain about what infrastructure is not available or what can be done better, and there is improvement. I think we can improve the speed of clearance at ports. We can make the transportation infrastructure. You know, it does take a lot of time. As you said, Sriperumbudur, supposed to be in Chennai, but still 55 kilometers, takes 1.5 to 2 hours by road. So there are some infrastructure bottlenecks that add up to the cost. But I think in the larger scheme of things, we are happy with where we are.
Do you feel India or Chennai, where you are currently manufacturing, has that potential to become an export hub? And although I might be thinking too far, do you think we can rival China, Southeast Asia maybe?
Well, I think that is a little too far. We're just starting at the beginning of the agenda. You know, obviously our initial focus is the domestic market. And the reason is simple, right? When you have a smartphone market that's about 100 million units or approaching that landmark, growing at 15-20% a year, the opportunity is just so huge. So right now all our focus is on the domestic market. The Prime Minister himself is talking about it. He's talked about moving us from 167 on the list to being in the top 20. I think it's a very ambitious, top 50 rather, very ambitious goal. But I think that will make a big difference, because it's not just about the unit itself. It's about all of these put together, because those add costs, right? The stability of laws, the stability of rules, that's another thing any multinational looks at. I mean, you can't come in, make this large millions of dollars of investment and suddenly the rules change. I mean, those things are the things that I think if we can stabilize and work as a country, I believe there's great opportunity.
Pleasure talking.
Absolute pleasure. Thank you very much for hosting us.
Thank you very much.
Thank you. Bye-bye.
After a short break, we talk to Lakshmi Narayanan of Cognizant on the startup space in Tamil Nadu.
Over the last 3 years, Chennai has seen quite a bit of startup action. New economy ventures, most of them in the tech space, now call the city home. A city that is home to several traditionally run large businesses. Clearly, Chennai has shaken off its image as a conservative city.
Come 2016, Bharat Matrimony could become the second Indian portal to go public. From its humble beginnings back in '97, the Chennai-based online matrimonial website has grown 8-folds in 18 years. Bharat Matrimony may not be the only Chennai-based company set to go public in the near future. 3 more medium and small enterprises like TVS Logistics, Fresh Desk and Equitas are also looking at tapping the capital market soon. Microfinance company Equitas Finance is looking to raise 2,000 crore rupees through an IPO by early 2016, while customer support software maker Fresh Desk is also eyeing a capital market listing in the next 2 to 3 years.
We have with us the man who was a part of the IT revolution in the 80s and also played a crucial role in IT major Cognizant's growth, and now he's busy promoting entrepreneurship and has assumed a new role of a mentor. We have with us Mr. Lakshmi Narayanan. So thank you so much for talking to CNBC TV 18. My first question to you is, how do you see the overall ecosystem? What are the things that are fascinating you when it comes to the startups?
We have a beautiful ecosystem that has evolved in Chennai, which is creating an impact throughout Tamil Nadu. I'll give you examples of components of this. First and foremost is in educating. In educating, the ICT Academy, which is an organization, now I can even call it an institution, supported by the Government of India and the state government, run in the PPP model, run completely by the private sector, is playing a vital role in reaching out to schools and educating them about entrepreneurship, reaching out to colleges and again teaching them entrepreneurship. Now once that step is done, an ICT Academy reaches to about 450 colleges, where in every single college you can make an impact. The moment that happens, the students are asking the college people, the college management and the principal, saying, now I want to try out some ideas. I want you to provide some funding. Then when we recently ICT Academy conducted a survey in colleges to find out what is it that young minds and students want to do. More than 50% of the students said that we want to be part of startups, not traditional companies. This is the first time that we were surprised by the numbers. And of course the definition of startup was much broader. What they felt was, if it is a new idea or any company that has been in existence for less than 5 years is considered as a startup, and more people want to join, which is the help that is provided by the ICT Academy. Now once the incubation is done at the college level, when they leave the college, they need that incubation facility to be available outside also. And that's where an organization like TIE, the Indus Entrepreneurship Institution, takes over. TIE, for example, has tied up with PayPal. PayPal provides incubation facility free of cost for companies. They provide mentorship, facilities, everything for all these startups to come in and try out their idea, and they give a clear 6-month period. At the end of 6 months, you should get the funding and be out of that facility. If you don't, you're out anyway, because the idea is not going to succeed.
Well, as you say, a lot of Chennai companies are now eyeing for an IPO or planning to hit the capital market because they are scaling up their operations. But do you find any pitfalls when it comes to the startups being in the race to grow?
Yeah, I mean, I think several of these companies would require capital to scale up rapidly. In one respect, many of these startups in Chennai and more so in Tamil Nadu, a lot more conservative in terms of use of cash. They're very, very particular. It is burning cash is not something that comes naturally to people here in Chennai. They're extremely cautious. So if they can avoid or push going the IPO way further and further, they'll be very, very happy to do it. I'll tell you the example of Bharat Matrimony. Bharat Matrimony has literally millions of customers. They are fulfilling a very, very useful purpose in society, well respected.
They're going big on big data as well now. They're working on it.
They're going big on big data. You know, that they may come when using artificial intelligence, they may be able to recommend people, you know, you are ideally suited for pairing together, etc. But that's a different story. They have postponed tapping the public markets only when it is absolutely necessary. You know, that's something that we have noticed as part of the system. We believe Bharat Matrimony is one of the companies that will have a successful IPO. Another company that's doing very well, Equitas, you know, in the area of microfinance, Mr. P.N. Vasudevan, doing a tremendous job.
After a short break, we bring you some of the key developments in the infrastructure and real estate space in Chennai.
When Chennai's newly inaugurated metro rail chugged off on its maiden journey, these happy commuters became the enduring image of the day. But right outside these blue and grey metro coaches, a bigger success story was just unfolding. Chennai's real estate had finally hit its long-awaited inflection point. I'm coming to you from the Alandur metro station, which is the starting point of Chennai's metro line. Alandur is a testament to just how much of an impact a metro rail can have on a city's property market. When the Chennai Metro Rail was announced back in 2009, prices here were hovering around 3,500 to 4,000 rupees per square foot. Today these prices stand at a solid 7,000 rupees per square foot. Realty consultant Jones Lang LaSalle has reported that prices around the Chennai Metro Rail have been rising steadily for 6 years and have today appreciated to 7,000 to 16,000 rupees per square foot. JLL predicts that prices could still rise by another 15%, and that's only for the metro corridor already under operation. 9 stations in the currently functional Green Line are yet to open, and a significant upside in prices is very much on the cards. Ditto for the property market, flanked by the upcoming Blue Line that will connect the Madras High Court in North Chennai to the airport in the south. This corridor will be ready in late 2016.
If you take a look at it, the first entire corridor which is going to be linked and has already been linked, if you have to call, is Alandur to Coimbatore and the north side. So the north side was actually devoid of any connectivity in terms of coming back to the southwest of the city, and today city is moving towards southwest. So that will definitely see an appreciation in prices for real estate developers who have already built, because today people will see that there's an ease for commute. Ease for commute makes it a destination by itself.
At Guindy, one of Chennai's older financial hubs, the metro rail's influence is for everyone to see. Construction activity has dotted the skyline and development is in full swing. Top developers like VGN and Olympia have launched both residential and commercial projects in the vicinity. Even as far as Ananagar, where the current metro corridor ends, the Ozone Group's 29 towers strong Metro Zone project forms a perfect background for the metro rail. But these developers aren't as convinced as JLL of a significant price rise in the short term.
The current demand-supply situation which is there is not going to favor any further price increase. So, whether it is metro corridor or a non-metro corridor, there is not likely to be significant change in prices. But I believe that things will change in the course of next 12 months. Because the metro rail is commissioned, I expect a lot more commercial activity to come. The commercial activity is going to drive the residential activity.
And that's why the metro's success story could well script the comeback of commercial real estate in Chennai. A number of big commercial deals are expected to be sealed along the metro corridor. A lot of the metro rail's success hinges on just how much developers can build around the metro corridor. Now, they've been lobbying for higher FSI around the metro rail. These builders' pitch to the city's administration is get more people to live and work around the metro rail. Let's see if the Jayalalitha government obliges before state elections next year. In Chennai, this is Jude Sanas.
We've observed a really interesting trend. From defunct mills to old factories to industrial land, builders in Chennai are buying it all to develop luxury housing. Jude Sanis finds out that this is actually a good bet for home buyers.
As cities begin to grow, they also begin an almost automatic process of redevelopment. Part of this redevelopment involves the heavy industries moving out of the city and into the suburbs. These industrial land banks then turn vacant, opening up scope for new real estate development. That's exactly what's happening in Chennai. Join me as I find out how. This neighborhood in North Chennai is historic for more reasons than one. Perambur began as the city's cantonment area during the British Raj and quickly doubled up as the city's primary industrial zone. But today, a 140-year-old legacy is nearing its end. When these bulldozers end their demolition in a month from now, the historic Vinny Mills will be ready for redevelopment. The dilapidated mill, also a prominent location for Tamil films, is making way for North Chennai's largest township, spread across 70 acres. This industrial pocket is one of Chennai's oldest squatters, but is soon going to be the city's newest residential oasis. North Chennai's makeover started in 2011 when local builder Arihant joined hands with Unitech to redevelop 70 acres of land previously owned by the mill. Then in 2013, Chennai headquartered Landmark Constructions bought 14 acres of a defunct mill for a jaw-dropping 490 crore rupees or rupees 35 crore an acre. Landmark is expected to launch a luxury residential project priced above rupees 10,000 per square foot, significantly above the market rate of rupees 7,000 per square foot.
With more land coming for development, it's actually creating a new market for itself in northern part of Chennai. And these are the kind of people who don't really have to travel into the south for IT. So there is a lot of potential. The pricing will go up year on year from 5%, 7%, probably 10% at the most.
2 months ago, local builder Casa Grande bought this 5.5-acre land parcel in South Chennai that once housed automotive manufacturer Rane's valve making unit. The builder has also bagged a 58 crore rupee investment from Motilal Oswal. Taking us on a tour of this newly acquired land bank is Casa Grande's MD Arun Kumar. Arun tells Prime Property that his upcoming project will be a luxury offering, but with what he calls a realistic twist.
The market is not performing great, so it's better off for us to be realistic on the expectations and give a very, very good pricing. Actually, and to give you an indication, this location is about 7,500 rupees to 8,000 rupees by most of the builders in the surrounding location, whereas we would launch it at about 6,500 rupees, 6 to 6,500 rupees.
Buyouts like these will create new residential pockets, and the state government is pitching in by developing infrastructure. For instance, Casa Grande's new address scores big on location thanks to its proximity to the international airport and the upcoming metro. So what does all this mean for the home buyer? For one, location. The Casa Grande, Arihant and Landmark transactions will allow people to live in the more older and prime localities of Chennai like Perambur. Remember, it's not easy to find homes in these parts. Plus, there's also a possible price appreciation of 10 to 15%. So you might want to strike while the iron is hot. In Chennai, this is Jude Sanas.